Tom Lee, a CNBC contributor and managing partner at Fundstrat Global Advisors, is joining us today. Carl, it's nice to see you, Tom. Asterisk, asterisk, Tom. Asterisk, asterisk. How are you, Carl? Carl, I'm doing fine. What do we think of the market given the amount of jobs in the VIX, which is still near 20 today, and which I know you're keeping an eye on? Asterisk, asterisk, Tom. Asterisk, asterisk, indeed. I believe that we are in a challenging time due to a number of factors, including geopolitical risk, the conclusion of the port strike, and the seasonality trends that I am aware of in October. Seeing the stock market respond favorably to a job report is, in my opinion, excellent news since it indicates that the economy is not only surviving, but that the unemployment rate is declining. However, I concur that the VIX is crucial in indicating our potential rally. I am aware that our head of technical strategy, Mark Newton, believes that today's intraday lows are paving the way for us to reach new highs the following week. That seems reasonable to me simply because the economy has been strong, and we will receive the CPI the following week. However, as you point out, the VIX is simply remaining persistently high, so I do not think it is easy to claim that this is a green light into year-end. Carl. Tom, there have been some shifts in the swaps market concerning the magnitude of anticipated rate reduction in the future. Now that it looks more like a 25 basis point drop in November rather than a 50, how does that change the arithmetic, if at all, for the equities markets? Is that something that is already priced in, or does it affect equity market expectations? Asterisk, asterisk, Tom. Asterisk, asterisk, we are aware that the bond market is impacted by Fed fund futures and expectations for the size of reduction over the next two meetings, and we are witnessing that reaction today. The fact that the Fed is in an easing cycle and we're moving towards neutral is, in my opinion, more important for the stock market than the fact that some people believe the Fed erred with the 50. Therefore, even though yields are rising, I believe there will be periods when the stock market or the S&P will climb. I believe we're in a situation where yields may be rising if economic data improves, so we're kind of climbing for good reasons on yields, which I believe is positive for equities. Therefore, I don't think it signals the Fed is suddenly going back to increasing. Thus, I'm not too concerned if the odds of a 50 have decreased today due to a strong employment report. Carl, regarding China, Tom, is it conducive to world development? However, how is it counterbalanced, if at all, by any liquidity drains or simply the rush of hot money to try to cooperate with us or cover shorts over there? Asterisk, asterisk, Tom. Asterisk, asterisk, overall, I believe it's excellent news that China's POC and government have implemented a bazooka set of policies because in the last 10 years, it has been a major underperformer and a drag on the world economy. I don't believe that American investors are selling their small-cap stocks or even American stocks in order to purchase Chinese stocks. It's probably coming from all of this money on the sidelines. We are aware that margin debt is still much below the peak of $936 billion in 2021 and hasn't changed in 4 months. I believe this is pushing money into action since we know there is $6 trillion in cash on the sideline. But all in all, I believe it to be a good background. It's more firm now that I've returned from Asia, my second trip in the last 6 weeks, because of everything we're witnessing regarding chip demand and the use cases that are ultimately propelling AI and the hyperscale, to Microsoft. I'm really becoming a little more optimistic. Considering how we see the AI revolution, I believe the numbers will be significantly higher in 2025. We're only getting started, and I believe that the tech industry is in a risky position as the year draws to a close. Then why has the chip trade been so sly, Carl? Asterisk, asterisk, Tom. Asterisk, asterisk, demand softening is, I believe, what people are most concerned about. But that is why we spend so much time in Asia. We believe that demand exceeds supply by a factor of 15 to 1, which demonstrates the optimism not only for the godfather of AI, Jensen Nvidia, but also for the hyperscalers as a whole. Microsoft, Amazon, and Google are the mainstays. I now consider those to be the second, third, and fourth derivatives. Because of this, names like Palantir are prominent among the use case names. Previously, I believe many institutions kind of ignored them, but now they are. Carl, and you believe that the stocks don't contain enough? At this stage, a lot of what we are discussing is known and expected, which is why prices and valuations have increased. Asterisk, asterisk, Tom. Asterisk, asterisk. When you look ahead to the next 2 to 3 years, I think the street is underestimating tech figures by 15 to 20%. Our main argument is that as these use cases develop, just 3% of businesses have truly adopted automated intelligence. I see that happening in Asia, and you have $1 trillion in AI capital expenditures coming. For this reason, I think the tech industry will grow by another 15 to 20% over the next 3 to 4 months, despite the bears trying to frighten people as they come out of hibernation. Asterisk, asterisk, Carl. Asterisk, asterisk, is he overly optimistic? Asterisk, asterisk, Tom. Asterisk, asterisk, last year, he was criticized for being overly optimistic. Here is what transpired during that time. With a 167% increase, Nvidia is now the market's second best performer. Okay, now they're going to rotate away from the AI darlings. We're going to do something else, someone stated in January of this year. After 8 months, you know what? Nvidia is the best performing stock of the year. Nvidia cannot continue to be up 136% annually at some point. But the notion that we will all be wise enough to realize that this is it, this is the top, and it's time to rotate out, keeps people fooled. Nvidia keeps up its bid. Carl, oh, you're in the investment business. What do you think about Nvidia? Is what everyone you meet, I mean everyone. Additionally, some individuals are unaware of what Nvidia is. Do you not think that has somewhat subsided? Asterisk, asterisk, Tom. Asterisk, asterisk, sure, but that's a good thing. The market is healthier as a result. It is comparable to GameStop. We heard it from the person cutting our hair, so it's like we should all own GameStop. Not in my opinion. Thus, the dynamic is the same. You need a more comprehensive plan, and the specialists purchasing these stocks are familiar with the businesses they are investing in. There are other purchases in addition to the S&P index, which is also rising. I'm not saying that Nvidia earnings watch parties won't happen again. They will certainly happen, but it seems like some of the excitement has subsided, which is a good thing. Carl, you present a compelling argument after all. Now, aside from the megacaps, a chipmaker, Cerebras, has filed for an initial public offering, IPO. Perhaps they will challenge Nvidia. Sam Altman, Code 2, Altimeter, and Benchmark are among the backers of the company, which was valued at $4 billion in the most recent fundraising round. They intend to list on the NASDAQ. Asterisk, asterisk, Carl. Asterisk, asterisk. The highest owned SIMIs are still comparatively underweight, according to B of Ed today. What do you think of the fact that the most owned SIMIs are still comparatively underweight? If you wish to believe that, Steph. Asterisk, asterisk, Steph. Asterisk, asterisk, yes. But that is what occurs when you're at 8% of the S&P, or 6.5% with Nvidia, and 2% with Broadcom or whatever. 10% in 2 names. If you were overweight, your portfolio would consist of just 6 equities. Therefore, the statistic does not indicate the existence of an opportunity. It's being painted that way. Asterisk, asterisk, Tom. Asterisk, asterisk. In fact, I find it fascinating. If you will, I have been contributing to Lam Research and Broadcom on the dips. Since they are erratic stocks, you get to see them occasionally, don't you? In my opinion, Broadcom is the company I wanted to wager on above Nvidia. Although it hasn't performed as well, I still believe you may make a significant amount of money. Broadcom's AI business is expanding 3 to 4 times, which is why I like them. However, they also have VMware, which radically alters the landscape in terms of software, margins, and free cash flow. I'm betting on that one. But I also kind of like the fact that if it's true that people are underweight SEMIs, it's not a bad thing, Carl.